Hello and welcome. Coming up in today's stock analysis video, we are going to examine Novo Nordisk. During our stock analysis, we're going to look at the recent news, explore the key pillars, examine the ownership, look back at past results. We'll find out what the analyst predictions are, as well as giving the business a valuation and work out any potential return on our investment. We'll compare the company against its competitors, and finally we'll summarise what we've found out. This is Bitesize Investments, giving you a step-by-step approach to your investment journey. Before we jump into the key pillars, let's just find out the latest news headlines for the company. Novo Nordisk engages in research, development, manufacturing and distribution of pharmaceutical products around the world. It operates in two segments, the first being the diabetes and obesity care, and the second being rare disease. A type 2 diabetes medication called lixisenatide appears to slow down the progression of Parkinson's disease symptoms, a trial held by the French Ministry of Health has found. In February, Novo Nordisk initiated the start of a share buyback program which will continue throughout the year, worth about $3 billion. In a deal worth $1.1 billion, Novo Nordisk has bought heart disease drug maker Cardio as the company looks to increase their footprint in the cardiovascular medicine industry. Let's start by looking at the key pillars of the trailing 12 months. Within the first pillar, we want to explore the return, which helps indicate how good the management of the business is. So we'll look at the return on invested capital, which is a calculation used to assess the company's efficiency at allocating capital under its control. Return on invested capital is 63%, return on equity is 79%. This is amazing since we would like to see both of these above 10%. So this is a great big tick for Novo Nordisk management and indicates this company has been working incredibly effectively. Now we're going to look at the free cash flow yield, which is a financial ratio that compares the free cash flow per share of a company against its market value per share. For Terry Smith, free cash flow yield provides a more realistic view of a business's financial health and profitability than traditional earnings or dividend yields. It's based on the actual cash a business generates rather than reported earnings, which may be subject to various accounting adjustments. So at 2.11%, this is a little lower than we would like, but still fairly healthy. Now let's look at the gross margin, which is the amount of money a company retains after incurring the direct costs associated with producing the goods it sells and the services it provides. This is 85%, which is pretty amazing, so is one of the highest gross margins I've ever seen in a company. Next we come to the operating profit margin. This tells us how much profit a company makes on a dollar of sales after paying for costs of production, such as wages and raw materials, but before paying any interest or tax. Novo Nordisk's operating profit margin is 40%, which is pretty incredible as well, as it's well above the 15% rate that I would ideally look for. Now we move on to debt, and Phil Town prefers a company that is able to pay off debt with their free cash flow within 3 years. Novo Nordisk can easily use their free cash flow to pay off its debt, as this is only 0.33. Lastly, we're going to look at short selling and see if any traders are expecting the share price to drop. So anything that is over 5% we would tend to avoid until the volatility has settled. At 0.14%, this is suggesting traders are selling well away from Novo Nordisk, as I don't believe they can successfully short the company. If we look at the revenue and expenses chart, and when we convert the currency, we can see that Novo Nordisk's revenue is over $22 billion. And if we look at the cost of sales, this is excellent, as it's only 15% of the revenue brought in. There are currently 5 super investors who own this company. If we look back at Pollen Capital's previous history, we can see this is a new purchase for them with about 29,000 shares. When the price seems to drop dramatically, this is only because there was a stock split at the time. However, 3 other super investors have sold shares in Novo Nordisk. Ken Fisher, who had a large position, has been repeatedly selling off the stock as the share price has increased over the last 2 years. Now we look at the past historical prices of the company, as this will help us build a picture of periods of success or failure the business has been through. As we can see, the share price up until 2019 was fairly flat, but in 2020 their average share price started to trend up, and in the last year it has rapidly increased, and now is trading at about $125 a share. So let's see what the analysts think. A number of analysts believe that Novo Nordisk is overvalued at the moment and believe the fair value is nearer to $100 a share. However, the general consensus is that Novo Nordisk is still a strong buy at the moment based on the company's strong revenue, gross margin and strong moat. Now, in order to build a valuation, we need to look back at the past, but also decide on a possible future for the company. Let's look back for the trailing 12 months and see what insight this gives us. The PE ratio is 45.69, the earnings per share is 2.66, which is a 53% increase, free cash flow per share is 2.65, which is a 2% increase, revenue is 7.40, which is a 34% increase, book value per share is 3.39, which is a 30% increase, and the equity growth over the last 10 years is a 20% increase. Next, we need to decide which type of valuation will be best suited for the company: a discounted free cash flow to the firm, a dividend discount model, or an earnings per share growth model. For this particular company, I'm going to use an earnings per share growth model. So I will use the current earnings per share of 2.66 as my starting point when creating a valuation. Looking back over the past decade, Novo Nordisk's average growth has been about 20% over the last 10 years. I'm going to give Novo Nordisk a PE of 40. After that, I'm going to project these numbers forward by 10 years. This then gives me an estimated future stock price of $660 per share for its future share price. Then we need to include our 15% return and work out the current value that Phil Town calls the sticker price, which is $124, which happens to land pretty much bang on the current share price. And finally, we apply a margin of safety, which is going to be a generous 50% in this case, which gives me a buy price of $62. However, you may decide that you're prepared to lower this to say 20% due to it being a premium company at the moment, which gives me a buy price of $100. As we can't rely on just one valuation model, I'm going to dig a little deeper and gather some more information. In this next section, I'm going to get some help from some super investors. To start off with, I will use the Peter Lynch PE ratio model to help determine if the share price is overvalued, fairly valued, or undervalued. So we take the share price, add the dividend yield, and divide it by the current PE ratio. So using this model, it suggests that Novo Nordisk is currently undervalued. Then we're going to move on to Warren Buffett's 10 cap model, where you divide the free cash flow with the market cap. The higher the percentage, the more the company is undervalued. So at 2%, this suggests it's a little overvalued at the moment. After that, we're going to move on to Joel Greenblatt's favourite tool for working out if a company is correctly valued, which is dividing the enterprise value by the earnings before interest and tax. At 37.40, this suggests a company is overvalued at the moment. Finally, I've also included Phil Town's earnings per share growth model that I used earlier. This suggests the present value is about right, and with a 20% margin of safety, a buy price would be about $100 a share. If you're interested in reading any of the books by the super investors I've mentioned today, please look in the description to find out more information. In this next section, we're going to split the chart into different zones. Our first zone is between $47 and $78 and represents our market bottom. After that, zone 2 is between $78 and $104 and for me represents a buy price target. We currently seem to be in zone 3, which is between $104 and $128. And finally, zone 4 is anything above $128 and is a possible exit strategy depending on A, what you paid for the business, and B, what return you are wanting to achieve. In this next section, we want to find out our potential return would be if we bought at today's price of $124 per share. If the share price was to hit the 52-week high of $138, then we would see a return of 11%. Novo Nordisk does pay a dividend of 98 cents, and this has grown by 56%. The payout is 36%, so they're not overstretching when paying the dividend out to its shareholders. Novo Nordisk has a large market cap, and Morningstar believe they have a wide moat and currently own 50% of the market. In this graph, we're going to compare the operating profit margin of Novo Nordisk, Johnson & Johnson, United Health Group, AstraZeneca and Eli Lilly. By comparing the operating profit margin, we can see the relative performance between Novo Nordisk and its main competitors. And the chart tells us that Novo Nordisk are significantly more effective at generating profits from their core business activities, and therefore better positioned to protect themselves during any economic downturn. In this next graph, we compare the return on invested capital, and even though this has dipped for Novo Nordisk in the last few years, it is still outperforming its rivals. However, when we compare the PE ratio and the enterprise value to EBIT, we can see that Novo Nordisk is a little overpriced when compared to other companies within the same industry, but not as much as Eli Lilly. Finally, let's summarise what we found out about the company. The management of the company is excellent and they work hard to ensure shareholders are looked after. Not only that, but they control about 50% of the market and are considered by Morningstar to have a wide moat. 5 super investors are buying whilst 3 are selling. Looking back at the past results, we have found out that they are currently in upwards trend for the last 3 years. The overall analyst consensus at Novo Nordisk is a strong buy and are still predicting them to grow by 20% in the next few years. Based on the valuation models, I am setting my buy price to about $100 per share. My overall rating for Novo Nordisk is 5 stars out of 5, and within my own watch list I'm giving it an A-star rating. Thank you for joining me during this stock analysis video. As I'm a relatively new channel, please consider using the comments section to help me develop the content I'm creating. And lastly, if you've enjoyed the video, it would be greatly appreciated if you could like and subscribe to help the channel grow.